Welcome to your weekly market update. We got an action-packed week. We have the Fed rate funds decision. We have the jobs report for the month of January coming out on Friday. And we have this battle at the floor of mortgage bonds and the ceiling of treasury bonds. I'll pull up those charts in a second. Remember that there are several different ways to invest. Mortgage-backed securities is one of them. Think of your 401k, think of the pipe fitters pension fund, think of a bond fund, that's mortgage-backed securities. There's US Treasury bonds, that's our government issuing bonds to pay for debt and to collect money. And there's the stock market, there's crypto, there's other markets, but these are the three main markets that fight over investment dollars. So they're all working with and against each other to fight for those dollars. So it's widely expected that the Fed will increase the prime rate by 0.25% at the meeting on Wednesday. And it will be more important in the details of what they say in the report. Is this the last one? It feels like they're slowing it down. Remember, we've been 3 quarters, 3 quarters, 3 quarters, and now they're pulling back to 1/4. So that's a good sign. Hopefully there's language that they'll be done or they're making progress. They haven't really stepped out and said that yet. Fingers crossed for this. Remember, May 10th, we're expecting interest rates to come down substantially. When you look at the chart here, this is mortgage-backed securities. So let me share my screen. We are in this tight range, so really good. What we are advising clients at this time, this could change any minute of any day, but we have 10, 12 loans right now floating in this range. When they hit this line, we'll lock. We got very strong support below us, so it's going to have to take some crazy news. I don't think the debt ceiling is enough to push it below this. We will see. So we've been trading in this range, and then check out the treasury bond markets. Super tight range too. So we are all in this tight range. It will take something big to break us out. Our fingers are crossed that the Fed comes out and says something big, that the job report helps us on Friday. So the good news is interest rates and the volatility have tamed down. You are still seeing, in my opinion, a buyer's market. We're seeing buyers negotiate on price. We are seeing buyers get credits. We are seeing buyers be able to have all their repairs made on the inspection. So we're seeing those three things. We really haven't seen those the last 3.5 years. I believe this market will shift around March to April back in control of the sellers. We still have very limited supply and a lot more demand, which will even increase larger when interest rates come down. So go out, negotiate on the price now. Refinance after 6 months. We'll do that free of any of our costs if you use us on the initial loan. And gosh, we're just here to help you get under contract. We're seeing tons of great activity in the market. We had our biggest week since October last week. We are seeing 6 out of those 8 deals that we got in were multiple offers. Remember, I'm calling the listing agent. We're using my $5,000 pre-approval guarantee. We're using my ability to close within 15 days. We're using our appraisal gap coverage to beat out the other offers. So I'm here to support you, help you through this search. Call us if you need any numbers ran, 312-731-4939. Email us, and we're always here to support any and all questions you have about your purchase.